There's nothing like getting a hot stock tip from some talking head on TV. Tesla's got nowhere to go but down. If you see it in the news, it's got to be reliable, right? So you follow their advice and dump your Tesla shares. Unfortunately, you waited too long to act. By the time you placed your sale, the price had already plummeted. But hey, a small loss beats a complete loss, right? A week later, Elon Musk announces a quantum leap in their battery technology, and the Tesla stock soars. Time to buy in again, right? Of course, by the time you open up your app to place the order, the stock is already at all-time highs. But that sense of FOMO is overwhelming, and your favorite stock-picking blogger said, you don't want to miss this rocket ship. So even though the price is now absurdly high, you take the plunge and buy back in. Okay, let's stop there. What's wrong with this picture? A lot, actually. And it's not just that you bought high and sold low. Today, we're going to talk about some of the biggest mistakes individual investors make in the stock market and how we can fix the situation. If you've invested any of your net worth into single stocks, or you plan to, I'm going to show you why you might want to rethink your strategy. Welcome to Stake Your Wealth, where we tackle all things related to personal finance, financial independence, and smart investments. If building wealth is a priority for you, be sure to click that subscribe button and join our crew at stakeyourwealth.com. Okay, first of all, I get it. Buying individual stocks is fun. In fact, it's as close to gambling as a lot of us ever get. And if the profitability of Las Vegas is any indication, we humans love to gamble. You see headlines about stocks jumping 200 or 2,000% on blockbuster earnings or a mega acquisition. That means if you buy $1,000 of stock in the right company, a 2,000% increase could turn that into $20,000. That sure beats groveling to your boss for a bigger bonus, huh? And whew, do you have a good feeling about that stock? In fact, you just heard from your friend that the company is about to have a technological breakthrough. Better get in now before everyone else does, right? Don't want to be late to the game. The problem is, as an individual investor, we're always late to the game. By the time you heard about the company's good news from your friend, any professional investor monitoring that company will have already acted. In fact, those professionals acted long before your friend even knew the good news. They acted within milliseconds of the press release, which was picked up by their AI supercomputers scanning millions of headlines per second. So, unless you have millions of dollars to deploy on high-frequency trading equipment and sophisticated machine learning algorithms, you're going to be at a significant disadvantage. Now, maybe your friend actually works in a management role at the company, and the tip she shared with you isn't public yet. Okay, fine. In that case, you would beat out other professional investors. But you might also go to jail because trading on private, privileged information could be considered insider trading. So either way, you lose. But your troubles don't stop there. Even the professionals, with their supercomputers, algorithms, and bleeding-edge mental models, still lose money. In fact, according to Washington, D.C. think tank American Enterprise Institute, less than 5% of professional money managers outperform the stock market. Just think about that for a second. Within the elite pool of people who are fully trained and fully equipped to make smart stock-picking decisions, which comprises some of the smartest people in the world, over 95% of those people would be better off simply picking stocks at random. So what makes stock picking so darn hard? In a nutshell, life. Consider projections of your own future. You know more about yourself than anyone on the planet. You have the most privileged information possible, and you know instantly before anyone else. Yet, despite that comprehensive information, can you say with complete certainty where you'll be professionally a year from now? How about 2 years from now? How about 5? Will you be promoted? Will you switch jobs? Will there be a war, a recession, or something else that forces your employer to shut down, causing you to be fired? The answer is that none of us really have any clue. So if you can't say with confidence what the future holds for you personally, even though you know your own situation intimately, how can you possibly claim to know what will happen to a company that you've only read about in the news? You can scan all the 10Qs and investor memos you want, but you can't predict a scandal that happens within the company's senior management, or the sudden rise of a competitor that puts the company out of business, or the discovery of a new technology that renders that company's product obsolete. The bottom line is that we live in a highly unpredictable world. And the more globalized our world is, the more interconnected geopolitics and transnational supply chains become, the more variables emerge that make our predictions even less accurate. Even the most powerful supercomputers in the world can't come close to predicting what will happen the next day, much less what will happen a year from now or 5. The 5% of stock pickers who do outperform the market are either really lucky or have a uniquely powerful intuition about a highly specific business dynamic that enables them to sometimes make really good bets. But they are still making bets, and eventually they lose. They just try to keep their losses smaller than their gains. And let's not forget, they have billions of dollars of capital to make mistakes with. For every investment decision they make, they can hedge against being wrong with a contraindicating investment. So if one goes down, the other goes up. That's where the hedge fund gets its name from. As individual investors, we don't have that kind of capital. And we don't have patient investors who'll give us money to cover our losses. If we bet the farm on a company that goes bankrupt, we go bankrupt too. Now, if at this point buying stocks is starting to sound insanely stressful and reckless, good, I've done my job. But don't despair, there is a better way. The solution is to stop betting on individual companies. In fact, don't even bet on groups of companies or industries or commodities. Each of these individually is subject to the same unpredictable risks we just discussed. For example, if you bet on oil, you might be disappointed in a decade when renewable power becomes the dominant form of energy. If you bet on commercial real estate, you might be bummed when the workforce goes remote and brick and mortar shop fronts are replaced with digital ones. When it comes to individual investing, my advice to you is to stop placing any bets at all, except one: bet on humanity. Trust me, if humanity fails, personal finance will be the least of your concerns. And when humanity prevails, as it has done consistently throughout recorded history, you profit. So how do you do this? Thanks to a man named John Bogle, it couldn't be easier. Bogle pioneered the idea of something called an index fund. Index funds combine a basket of individual investments into a large bundle of investments. The more diverse this bundle is, the less individual risk it carries. With index funds, instead of sweating about which company to bet on, you can invest in every high-performing company at once in a single purchase. No need to guess which industry is going to overtake the other. With index funds, you can invest in all of them in one go, weighted by their relative success. And the best part is that the indexes are constantly rebalanced. So if one company or industry overtakes another, the index will reallocate accordingly. And you don't have to lift a finger. In other words, index funds have created an opportunity for us to bet on humanity as a whole. If this fact isn't blowing your mind right now, I need you to pause, rewind, and make sure you grasp the power of what we're discussing here. Now, keep in mind that there are thousands of different index funds out there. Some are more specific, such as a fund that tracks precious metals or residential real estate in the American Midwest. Others are much broader, such as a fund that tracks the NASDAQ or the S&P 500. Now, with all the different index funds out there, how do we choose the right one? Well, if our goal is to bet on humanity, we need to choose the broadest possible investment we can. Fortunately, such index funds exist. My personal favorite is Vanguard's VTSAX. This fund tracks overall performance of the entire US equity market, including small, mid, and large cap growth and value stocks. And it has rock bottom fees, which you always need to pay attention to with these funds. And for a variety of reasons, it also covers international and emerging market growth. And it even serves as an effective hedge against inflation. But that doesn't mean you have to go with VTSAX or any of Vanguard's offerings. I have no affiliation with them. There are plenty of other broad market index funds out there offered by a wide variety of brokerages. The point is, you want something that doesn't expose you to isolated risk. Sure, in a global recession, these funds go down along with everything else. But because they include the entire market, when the world recovers, these funds recover even faster. For some perspective, if you invested $100 in such a fund at the start of the last century, today that investment would be worth over $7 million. That's a 7 million% gain. Sure, that's over the course of 120 years, but even annualized, that's still a highly respectable 9.73% gain per year. Now, the catch with these funds is that once you put your money in, you need to leave it there for a long time. That way, short-term market fluctuations don't affect your returns. This is very different than stock picking, where you're buying and selling on a yearly, monthly, or even a daily basis. With broad index funds, you buy when you have the cash, and then you let it sit for as long as possible. Just let it grow. Now, that's easier said than done. It takes a lot of patience, but just remind yourself that every technological advancement, every medical breakthrough, and every human achievement ultimately contributes to the growth of these funds. In other words, as the world gets richer, you get richer. Not a bad deal, right? If you want more context on investing in these funds, fear not. We have a separate lesson that discusses how to invest in index funds the right way. Now, as it happens, there are two companies that have done a fantastic job combining several high-quality, low-fee index funds into one comprehensive package. So if you're looking for a super simple service that encompasses everything we just discussed in just a few clicks of a button, I recommend you check out Wealthfront and Betterment. Both of these platforms make it super easy to set up and get an account going. They offer a fantastic blend of diversified, low-fee, market-tracking index funds, and they customize your allocation based on your age and financial priorities. My favorite part is that you can set up a recurring investment that pulls from your bank account every time you get a paycheck or when it passes a certain threshold that you set. In other words, both of these services make betting on humanity as easy as it can possibly be, and they charge next to nothing for it. I've invested my money with both Wealthfront and Betterment for years. You can't go wrong with either, and if you're like me, go with both. I've included links to both platforms in the description box below. You and I both get referral bonuses when you sign up, which helps support what we do here at Stake Your Wealth. So the next time someone gives you a hot stock tip, you can do the following. Thank them for their generous insights. Let them know that stock picking is for suckers and that you'll leave the reckless gambling to professionals. Explain to them the power of investing in human innovation. Show them how an index fund allows them to do that. And finally, congratulate them for joining the club of intelligent investors. Okay, that's enough of me jabbering. Go out there and make a bet on humanity. Now that we've discussed stock picking and index funds, I'd love to hear your thoughts. Which investing approach do you prefer? What other ways can you think of to place bets on humanity? Share that with me and the other wealth stakers in the comments below. Also, if you enjoyed this video, don't forget to subscribe and share this with anyone who loves building wealth. Finally, we publish the write-ups and podcasts for all of our content on our blog, stakeyourwealth.com. So be sure to check that out as well. With that, I bid you adieu and happy wealth staking.